Hello and welcome to another update video. As we're heading into a new trading week, the markets have opened again and we are moving higher. Or we did move actually on Friday already higher. Getting much closer now to the relevant resistance area, and even though we haven't reached resistance yet, we could say the scenario has been fulfilled. I mean, the idea is that was that we're moving higher in a B wave, yeah. Here, we talked about that over the last week and last couple of weeks after this nearly endless, seemingly endless sideways price action that started already early in May. We finally seem to be breaking out of the range. Now it would be nice to get a break above that small B wave high of 2870, but the idea was to push higher here primarily. And with this wave count, we talked about, okay, probably wave W, wave X, and another Y wave down is likely. Within the Y wave, we have an A wave, a B wave, and a C wave. And we're basically in this B wave. And I decided to count it in a way that I said, okay, in this B wave, here again, A, B, C. But within the B wave, another A, B, C. Honestly, very complex structure. I mean, I'm surprised myself that it worked out, but for me, it just had the right look to get one more high here. Now, okay, it hasn't quite reached resistance, but it's not necessarily target. It's more like resistance. What I wanted was a higher B wave at least, yeah. To be honest, it should ideally move a little higher, but I would already count that as a B wave. But ideally, it should push a little higher. 79.50 would be ideal. It doesn't need to though, because B waves sometimes react to the 38.2 fib level here, but it broke through it. So in all likelihood, it should reach that 50% fib level, maybe even the golden ratio, the 61.8 retracement at 81.40. So that would be ideal. And then from here, I would primarily expect, based on what I see, a turnaround to the downside. I would expect some resistance in this area. However, if it breaks above $84, yeah, then maybe something more bullish is going on. But probably more like just an extended corrective bounce, maybe in an X wave. But at the moment, the way this whole thing looks, I would expect a resistance to be found here in this region with another move down, and that next move down could be quite substantial, and it could end the overall bear market for oil. And yeah, now let's take a look at WTI as well. This was Brent Crude oil. So I haven't got it open, but we can do that quickly. WTI. And yeah, on this chart as well here, similar story. Here it actually reached the, let's say, resistance area target, but also the proportions are a little bit different on the WTI chart. The idea here was for this B wave to reach the area between 73.50 and 79.20. Well, it was reached already. I would say it's because of the this structure here. Ideally, I'd like to have that C wave of B above the A wave. So ideally, it would push to the next fib level, which is at 75.90, maybe even 79.20. Only above 79.20, something a little bit more bullish maybe going on here. Yeah. What I don't know is how much can I trust this wick down, because obviously one reason why this box is so far down is because of the wick to the downside. Now, if I disregard the wick, it looks more like on the Brent Crude chart, but I can't ignore it. So I'll leave it like that. Let's see where we get to. Short-term trend is clearly up. Resistance is starting now, and also from here, I would primarily expect a move eventually to the downside to complete this bear market for oil. The structure is the same as on the Brent Crude chart. That's my update about oil. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.